Next, the sun has risen on the Indian IPO market. We'll feature insights from Mayank Kumar from upGrad, Pranjal Kumar from Emeritus, led by Karthik Reddy of Blume. And they will be joining us to discuss the IPO market in India and its implications for education.
Very quickly, the background is Deborah was visiting our office a few months ago. We started talking about IPOs, and the conversation veered towards why aren't there more conversations around why companies in edtech or otherwise can go public. And we said, yeah, we should talk more about it, and this is the panel that came out of that chat at the office. Here we have two phenomenal companies which are probably going to spearhead that motion, and that's Emeritus and upGrad. Coincidentally, this is a very Mumbai panel. All of us flew in from Mumbai for this. And you know, the other context was as a VC firm, which I represent, Blume. We've obviously moved along the journey to become very sort of vocal about disclosures and eventually building with semi-public money, whether it's Indian or American or Canadian, to be accountable for that money. And I think the end state of most of those journeys lands up in the public domain. And so whether it's disclosures of numbers or going public, I've been a very vocal proponent of that. And I would love to see more poster children on the startup side do the same thing. And that was the motivation for this dialogue. So maybe to start with, we would love for both the companies, I think most people know these are the stars of the Indian edtech scene. So rather than going into detailed introductions, maybe a little bit about what the scale of the company today is, what's your sort of thought process around, you know, going public, and whatever you can share. I mean, I know you're not yet forced to do public disclosures, but whatever you can share will kind of set the ground open for me to ask some tougher questions. So we're going to spend about 10 minutes doing these questions, the generic questions, and we'll try to put both of them on the hot seat and go rapid fire. Yeah?
So, yeah, I hope next time when we do this, there are more panelists here to reflect the, you know, bright edtech sunrise that's happening in this part of the world. But just quickly, Emeritus, we reported our numbers, 3,300 crores, grew by 70%, 3x more than the next best player who's sitting on the left side of me. And looking at IPO, evaluating it at least in the next 2 to 3 years.
So upGrad, again, in the online post-K through 12 space, we closed last year, the reported numbers was about 1,100 crores. But currently at the run rate of $400 million. I think there's enough scope in the market. I think just some other stats, we are largely 70% B2C, 30% B2B, 80% India, 20% outside India. Largely sort of very strong India presence and India focus, but looking at expanding in the international markets as well.
So I know both of you have obviously chosen or agreed to be on the panel because the thought has originated in some sense of wanting to go public. If you can dial back, you with Ronnie, you with Ashwin, where do these conversations start? What's the first trigger point for some, big company to start thinking? Maybe it's about the time that we start thinking about this. So I'll break up the questions so that we don't have to do multiple questions. And then what do you start putting in motion? What is the level of preparedness that you need to be able to go public? What is the cultural shifts that happen in the firm? And how do you folks think about it? So both of you might have different experiences. The reason I feel this is important is because most founders think, hey, everyone's going public, maybe it's my turn in 2 years. And they've actually not even thought about some of the challenges of going public. So I would want you to inspire and scare them in some sense that time to start is now, if you really want to think about something 2, 3, 4 years.
So I think, going public obviously is a very deliberate and, sort of an important milestone. So to answer your question, what the trigger is, I think for us, we set a very high bar in terms of, corporate governance and overall plumbing, if I may use that word, right? So I think the first trigger for us, and we've asked, a lot of investors ask us the question that you can go public now because at our scale and we're profitable, we can go public even today. But I think the way we think about this is more long-term. To say, are we building a business for the next decade plus? And that's what the founders want to do.
Yeah.
And in that sense, the trigger for us really was when we became profitable. And we said, no, look, now it's the right time to start thinking about public rather than going public immediately, which some of the tech companies have done. The reason why we say it is thinking about is because, like I said, right, then you start thinking about how do you wire your company accordingly.
Yeah.
And to your point on disclosures, etc., it's all about ensuring that, you know, the right corporate governance, you know, you have the right sort of, you know, compliances in place, you have the right way to, you know, sort of report your numbers, get audited early versus wait for 18 months to get audited, etc., right?
Yeah,
So it's some of
you can't keep asking for deadline extensions.
You can't keep asking for deadline or change your auditors, etc., all of that, right? So I think there's a lot of those things that need to come in place, and then the trigger really is become profitable and then do it. Now, elaborate answer, but like I said, right, some investors ask us, but if you're profitable, you can do it now. I mean, there are a lot of tech companies who have raised on promise of profitability, in fact, right? But like I said, right, we have to think about going public is an event for some people to exit the cap table, but then also for a lot of people to come onto the cap table.
That's correct.
And as a company, it is our, you know, sort of duty to ensure that those guys who come in on the cap table then see long-term value. And hence, unless you demonstrate at least 2 to 3 years of profitability, reported in the right fashion, etc., you should not really go public, because that's possibly one of the other reasons that could go.
I have a slightly different view, but I'll ask Mike first to go first.
No, I think just one point, Karthik, because I was there on the previous panel, it was much more filled up. So I think the topic requires a lot more sort of education overall, which was a point that you were making, because IPO is not something people are thinking. People are still in that, okay, what's the model that will work, what's the approach that will work, etc. But I think in the journey of the organization, when you start thinking profitability, I think there's a minimum threshold scale, because for us, one criteria has been that if you have to list it at a scale when you potentially can be in the large caps, because if you're in the mid-small caps, you will always go day to day. Somebody else will drive your fortune, and that's not something that we want to be at. Our approach has been that if we have to go and list ourselves, we should be at a $750 million scale of revenue, at about 80% gross margin and 15% net margin. If we are able to reach to that level with a promise of 40-50% growth for the coming 3-4 years, we believe that's the right time for us to sort of go ahead and list ourselves at, because that's the time when somebody coming in has a point of view of sort of future growth trajectory that has been built in. It's not leaving money on the table, it is just that there's future growth that is built in into the platform itself. The third thing, so scale and this are like pretty simple and easy to sort of understand and sort of decipher. But one big challenge that we see in our stage of the company is just the level of predictability. And when you are at a certain stage, when you start seeing predictability both in terms of top line, cost structures, and EBITDA margins, so we believe that we are still some time away and there's work to be done, because A, we have to be at that scale, B, we have to be at that predictability level, C, we have to also open up growth engines which does not just cap out at the point of time of IPO, but takes us 3, 4, 5 years ahead in the journey. So those are the criteria that one needs to look at. In terms of what changes inside, I think, as Pranjal mentioned, there's a lot of aspects about governance that you need to sort of add on. You have an audit committee and there's somebody else who chairs the audit committee. You change the board structure. You bring in a lot of independent board members who are coming in sort of holding you accountable for a lot of these, for day-to-day business operations, etc. So I think all those changes start happening in. But I think we were discussing earlier, it requires a very different muscle memory than what you're tuned to doing. Everything is about, let's try some experiment, let's try some experiment. It's not about experimentation. When you're going in all in. And therefore, there's a fair amount of preparedness that is needed even before going into IPO.
So the only point of view which is slightly different from my two esteemed guests is, I think I agree with you both fully on, and I will double click on a few of these in the second half, but predictability and consistency, right? And whether it's governance or whether it's numbers or whether an analyst can read these numbers and predictably know that you're growing at 30% or 40% is very, very important. Otherwise, I think you're going to spook the shareholders. And as you said, you have a responsibility towards them, who are very different shareholders from the venture guys who took the risk, right, originally. The only thing I don't think, with all respect to these folks and to your entrepreneurship, I don't think everyone can try and emulate what you've done, which is $400, $500, $700 million of ARR before going public, right? Some opportunities are love for that, some may not. And I respect the fact that both of you will potentially list as large caps in this market, right? But I think the narrative somehow has gotten spoiled by the fact that you should only list as large caps. And that I don't think that is for everybody. So there's a prescription which the unicorn-led VCs sort of drove, that unless you get to profitability, unless you get to a scale where you're a unicorn, you shouldn't think about listing. And I'm exactly in the other school of thought on this. We've had like SMB listings which have multiplied 10 times after listing and migrated to the main board after 3 years, right? I'm not saying everybody should do an SMB listing, but I just feel like India's stock market, surprisingly, has enormous risk appetite compared to your perception of how much risk appetite they have. That said, you can't hoodwink them. You got to still build consistency and predictability. Otherwise, they'll hate you for it and your stock will lie dormant. Yes, you might get manipulated or run up and down the stock ladder. But I feel as an entrepreneur, as some entrepreneur joked about me in the audience earlier this afternoon, the investor is given the money. It doesn't matter after that. It's the entrepreneurial journey. So if you're sincere about building in the private market, you will build the same way in the public market, right? You're not saying you'll take advantage of the public market and hoodwink the public. So you've got your 10, 15, 20, 30, 50, $100 million from the IPO. You will build the same way that you would have got it in the private market. So if you can actually figure out, I think the balance of power lies in when you know that you can't grow at 100% and you shouldn't grow stupidly. You get to a semblance of profitability and you say, to your point, can I grow 40, 50% more and create that wealth in the hands of the public investors? If I can do that, in some sense, I'm ready to go public, right? And so there are enough companies, a crazy statistic for you. There are 250 companies in the same time that it took India to build 100 unicorns, which were sub-$1 billion, most of them sub $500 million, and have grown into greater than $1 billion in the public market. So what gives? Why can't you list at 200 million and 250 million and grow into $1 billion company? Why do you need to raise private money and keep growing on that? So with that sort of thought, I think it's more subtle than that, and that's the question I'm going to ask Pranjal. You know, it's not about just going public or not, or choosing between one or the other. Like you said, the thought process should be, are you truly building an intergenerational professional company? And that's why I said, who takes that call? Is it like, you know, the founder with the core team and saying, what are we building for the next 10 years? I fully agree with you. If you don't have a 10-year roadmap, why go public and bring another set of new investors on? You might as well sell the company. So please enlighten the crowd on that.
No, so like, look, I mean, we work with partners who are more than centuries, you know, not just in existence, but also, you know, sort of being leaders in their categories, right?
Absolutely.
And that's the mindset that our founders and the leadership team carry, right? In fact, it's not 10 years, it's decades. I mean, while the leadership is 40 plus, but yeah, you know, we still have 30 plus years behind us, and you met Ashwin and Cheta, I'm still know what I'm talking about. So I think the horizon, like you rightly mentioned, is multi-generational. And it's very important that if you have that kind of a view, and you have a belief that you can create shareholder value consistently by doing the right things, then it's great to be public. Because public markets, unlike private markets, have different pools of capital. And as long as you're generating value, you'll always be consistently, you know, sort of be away from the vagaries of the private markets, right? I mean, 5 years back when I was an investor, everybody asked for top-line growth. If you're unprofitable, you're fine. Now, all private investors ask for EBITDA first before they even talk about top line, right? Yeah. So, I mean, private investors have their own view. I know you have a different view, but the reality is the KPIs keep shifting for the investors, but the public markets fundamentally have a framework where they consistently value, shareholder creation, value creation. Yeah.
Mayank, I know, I don't know how you structured, you know, as a owner group, but how do you guys think about the same problem?
No, so for us also, I think, so one thing is very clear that one has to be very, committed for a long term, professionally, with the professional management as well as a founder group. So I think one thing that I mean, shows that value. I mean, for example, between Ronnie and I, we have about 55% of the shareholding. So promoter group owns 55% plus in terms of holding out there. The other part is that remaining 30% comes from investor group, which are very long-term investors into our sort of cap table. So I think we have built a play where there's a very clean cap table and a long-term horizon that has been built in with the incoming investors and the promoter group. So we are looking at, I think for us, it's very clear that you have to think about what the next 5 years, next 10 years, and what kind of company you're sort of working towards and building out in the long run. The second thing for us, which is very clear, is that, see, education, sometimes it's a very easy business to understand, it's a very difficult business to understand also. So the clarity of the business, what is the business that you are in, because you would not have seen too many great education listing plays in this country, except for 1 or 2 sort of odd cases here. And therefore, the articulation of the business and articulation of the vision for the long term is equally important when you are going ahead and looking at the listing market. So for us, I think that play of having the right partners who are coming in to build something long term, having the right vision that is sort of taking you to figuring out what the next 5-10 year journey will be, because it's the easiest business to be misunderstood, because sometimes you compare that to an offline, not-for-profit, for-profit, this, that, etc. And therefore, you have to be very clear about what you're building, what kind of management team that you have brought in together, what kind of sort of ecosystem that you have brought together. Because then, at least it gives confidence for the new set of investor coming in that, boss, I'm not here for the short term versus long term. One other point, Karthik, we are very clear is that at the point of time of IPO, at least as a founder group, we are very clear the founder groups are not looking at sort of putting their sort of shares on the blocks at that point in time, because we believe there's a much longer play. And as you rightly said, if 200 can become a billion, I'm sure that 2-3 billion can become 20, 30, 40 billion over a period of time. And that's the game that we are looking at playing out here.
No, so there are some interesting takeaways, right? So I was just thinking of one of the earliest IPOs in the Indian tech market was Make My Trip, right? And Deep and Rajesh are still around. They're 13 years in. Teamly is like, they're still around, right? And yes, they take a little bit of liquidity once in a while, but basically they're playing the compounding game with 90% of their wealth. So essentially, I think the founders have belief, much like many Indian entrepreneurs built before venture capitalists came in, they believed in their own ability to compound their wealth in their own business, not in somebody else's business, right? And Mr. Pawarji is here from NIT, but like, these are all legendary stories. I have a view, but I wanted your view. Why do you think not too many edtech companies have gone public? Is it because most of the value was sitting in colleges, schools, etc., in the edtech sort of value chain in India? Or is there some other reason to explain just that there's venture-funded edtech, which is more like a 10-year phenomena. But prior to that also, we don't have enough phenomenal role models in education per se. And any views on why that hasn't happened? And I have like I had 2 points to make, but I'll make them after I hear you. Yeah.
You want to take it? Okay. So I think the time of edtech is now. Because I think what has happened is, in some sense, like Mayank was hinting, right? Edtech or education can be easily misunderstood. I also think that there's a regulatory sort of environment in which education is, right? Unlike some of the other consumer sectors. It is only now that from the supply side or the ecosystem side, we are seeing unshackling of the regulation, or at least a clarity of regulation coming in, which is sort of unshackling the education piece. So that's number one. Yeah. Number two is, if you look at even the models that have evolved in edtech, I mean, we started with MOOCs, then, the OPMs came in, etc., all of that. But I think it's only in the last decade or so that you're starting to now see a validation and, growth of tech in education being a strong facilitator and enabling this kind of a scale. Because fundamentally, education is very, very fragmented. Yeah. Right? And unless you have, like I'll use a great example of Amazon, right? Unless you have an Amazon for education, and you can actually, because the taxonomy is now becoming increasingly normalized across the globe. Yeah. So what you need is an enabler on the digital side, and that's happened now. So if you look at scale, if you look at regulation, the last thing I'll say is, unfortunately, we've also had false, public markets and false experiences in education with the EduComp days and some of the other trades, right?
That's right.
And that again sort of had an overhang on the ecosystem. It's unfortunately seeing some of that also in the private market now. But I think you have to sort of then give a little bit more time for the dust to settle and then sort of take it up. So I think I do believe very strongly that in the next 2, 3, 4 years, not just the two of us, but there'll be a few more who would then come into the IPO category or consideration.
So I don't like the word edtech, so I'll just stay away from that word. But overall, there's enough cases of education companies being listed. I think there are many globally, many in India, who have listed as education companies. But to add to Pranjal's point, I think today we are sitting at an environment where now technology has sort of come in, where one fundamental challenge with education is that scaling up of delivery gets very difficult when it comes to traditional form of education. Now today, that scaling up of delivery has been taken care of as aspect one. The second part in education which becomes very difficult to scale up is acquisition of customer, because each vertical is very large, but there are multiple verticals. I mean, you can teach somebody tech, somebody digital, somebody nursing, somebody healthcare. Yeah. So there are each of these pockets in which scaling up of customer acquisition becomes very difficult. Now what we are seeing is that each pocket is becoming big. Tech in itself is quite big, management is quite big, healthcare is quite big, and therefore building a pocket in that sort of narrow zone you're leading to some kind of scale overall. So I think those two factors is allowing a lot of tech companies to come in. This last point I will add, Karthik, which is very important, that so far the journey that we have seen in tech-led education, right? We had the wave one of education, which was all about access. So everybody got access and everybody got it. You can learn from MIT, IIT, Harvard, Stanford, and that access game was played. And then suddenly people realized that, okay, you have access, but it's not leading to completion. Then people started playing the game of completion. And everybody was focusing on higher completion. And then when completion happened, people realized there's no outcome.
Outcome, yeah.
And this is the time when I personally believe that most of the education companies here, if you meet in around that, the one word that they will all talk about is outcomes. Outcomes. Because people have realized that we had one case, and when one of the public listed company came that was providing tech solution to schools, they were coming into schools and setting up the system, but the outcome was not leading to something better for the school tomorrow. And that business had to sort of move away. And therefore, focusing on outcomes, and this is the first time all of us, I think the previous panel was talking about outcomes on government schools. Yeah. If you are focused on outcomes, you will build sustainable companies, because that will solve for customer acquisition. That will also solve for scalability of sort of delivery system. I think these three things is what I believe macro shifting, which is why I believe the story for the coming 4, 5, 10 years is going to be very different than what it was the last 10, 15 years.
Oh, thanks. And I think we'll move to a little bit more of a sort of a rapid fire format to just cover a lot more interesting questions. So maybe one-line answers, on
Did you share that with us? No.
Sorry?
Did you share that with us?
No, they're here. I'm converting them to sort of rapid fire because we have only 8, 9 minutes. So one is, do you think edtech takes the lead on, of course, there's some commerce companies out there, etc. But does edtech play an important role in setting up this narrative around IPO? And how does the Byju's story, the big elephant in the room, sort of distort that in the short term or medium term? Yeah.
Not rapid fire, right? It's a poignant question.
Your question was longer than one sentence, so I don't know how we can answer that.
Absolutely. I mean, if you ask me, Karthik, there's definitely, I would be foolish to say there's no sort of, there's no impact of that particular sort of event happening. But I also believe that it does not have an impact, given the topic of the conversation. I don't think it has an impact on the IPO market for education companies landing up at IPO. Is there an impact in terms of validation of the model and the questioning of the model? Yes, definitely. But people have built scale companies, and I think there are two examples out here. People are building scale companies at right cost structure and right sort of growth models. And therefore, I don't see that impact to be a long term. I mean, public memory is long and public memory is short both. And therefore, while there is a conversation around it, but I don't think it has an impact on the IPO market overall.
One quickly,
yeah. Public investors are smart, and if you have your corporate governance right, it doesn't matter.
Super. And you like chasing, I mean, you're the epitome of chasing the US market, but our global markets for that matter. So if you had to advise people in the crowd, should everybody have the courage to build a global edtech company or stick to or is India worth playing for in the long term? I mean, just from your experience of building global first.
There's a huge market. If you have the right product and solution for it, I mean, Indian market is deep enough.
In your experience?
Massive depth in Indian market. It would be foolish, but just from company's perspective, if you have a great product, they definitely sort of play in the global markets, but Indian market is very, very, very deep.
No, I agree. I think it's one of the biggest shares of wallet at home. Every parent has aspirations for their kid. It's like orbit shifting for most kids. So
That's my question, that everybody has a wallet and nobody has a wallet for themselves. They have a wallet for their kids.
that's true.
And that's the market that we are looking at shifting, which is that they need to have a wallet for themselves. If you have a wallet for healthcare, gym, and this.
The plain analogy. First, protect yourself and improve your own income levels.
Exactly.
The second is, I know one of you is shifting domicile, but would you list in India or would you ever aspire to list overseas?
India.
Any good reason?
No, I think, look, I mean, as founders, we understand the market, people understand us, the set of investors coming in sort of understand what we are doing and building out. It would be very difficult for me to build the same level of credibility when we go to the US market. Of course, the model is well understood, there are similarities, but there's a lot more that is going on. And as I said, as founder group, we are here for the next 10, 15 years. So a large portion of anybody coming in is putting bet on you as well. And therefore, that credibility plays an important role if you're looking.
What do you say, Pranjal? I know.
We have the flexibility.
Yeah.
So India is a great contender to be listed, is how I should put it. But is it a decision that we've still made? I think not yet.
Okay.
Not yet.
And what is the advantage you think of actually not being in India? Because most companies here, I think, aspire to list here.
Two reasons. We are a global company. 70% of our revenue comes outside of India. So there is an optionality for us to be there. Reason number one. Reason number two is we really have a very sort of high bar for, again, ensuring that we have the compliances in place, etc. That market values
you built for that flexibility, so you want to keep it open. No, I think I wanted that answer primarily because founders need to make a choice on compelling business reasons, not emotional reasons, or it's cool to be in Delaware, and I still get that in 2024, which is sad, but it's true.
Where? Delaware? Where is it?
So that's what I said. I think it became fashionable in between. I think now it's good that companies are making more logical decisions on having to list here if your market is here, if your people are here, etc. As you said, you get more recognition, you get more love as a consumer company. Which brings me to B2B, B2C. Is there an opportunity in B2B to build big enough? Because both your companies are predominantly B2C. I know you're getting some B2B revenue. Any views, even if it's not of your own company?
I would say B2B and B2C.
Okay.
Unlike some of our global players who are trying to sort of shift from B2C to B2B. I think, given again our model, there are certain products and solutions which work very well on the B2C front. And then, of course, there's a corporate piece which works well for us. So the way we think about this is B2B and B2C and not one versus the other.
So same B2C and B2B, but the reasons are slightly different. We are very outcome focused, and therefore for me the outcome is at B2B. B2B tells me what will work in the organization, and therefore that I can take it back to B2C.
So you're being informed by your end customer, which is the outcome-oriented customer.
If I know what the recruiters are looking for, I can build something for B2C. It's very difficult to do it vice versa.
Am I right in assuming both of you are predominantly online only? Or?
Yeah, 95% online.
And so your views, therefore, not on your own business, but
I think the one difference is we started offline. And I know you have a question on rapid fire about offline versus online, so I just want to preempt that.
And so what necessitated the shift, and do you think this whole move of everybody saying everything can be done online, is that more applicable to higher ed, skilling, etc., and for everything below that, do you have to have a hybrid of offline?
Yeah, so I think, look, we started online in 2016 after 5 years of being offline, right? Two reasons or two enablers. One, technology and acceptance or adoption from the learners, in our case was adult learners. Number two is, I think you can ensure high quality in online. Our completion rates, like he mentioned about outcomes, our completion rates are 80% plus, right? Our course ratings are 4+ out of 5. And the fact that we have such high quality metrics is not despite being online, it is because we're online.
Yeah, sure.
No, so I think, is the question more online versus offline? Or No, so when we look at online versus offline, just...
Do you think India can be tackled beyond a certain segment without offline?
No, but on 2-3 reasons, right? I mean, if you break down education, as I said in the previous conversation, there are 3 broad components. You have acquisition, it can be online, offline.
Correct.
You have teaching, which can be online, offline, and you have outcomes, which could be online, offline. So I think the easiest one for us to do is the first and the third. You can look at acquisition online, offline, and that's a blend that you can play, because in India, jo dikhta hai, wo bikta hai. And there is a placement component, which we are giving out outcome. If you bring in 100 people in a room, it's much better to deliver outcome. Teaching is difficult to scale online, offline, and therefore we believe that first and third is where blend will come in a lot more than the second element.
Super. Now I'm going to sort of ask the last two tail questions. One is, if you could turn the clock back, would you have done anything differently? Again, learnings that you can share with the audience on, could you have been an even better company at this juncture? Anything that comes to mind? And I know it could include taking too much money and burning it too, but like I'm just saying, anything at all, yeah.
Never live with regrets, so absolutely no regrets about the past. I think for us, we pride ourselves that we are one of the companies that have raised the least amount of capital to come to where we are. And I think ROC matters to us. So I think for us, looking back, I don't think I would have raised more or raised less. So have never lived with regret, never want to live with regret of the past.
I think if one of the founders would have been here, unfortunately I was on the other side as an investor at that time, they would have said that we were profitable till we raised money.
Yeah, that's true. Yeah.
Right, so I think...
I heard that from Ashwin, I did a podcast.
Yeah, so I think that's probably is what one should say, and that's a message to all the entrepreneurs here, that you cannot screw your unit economics. You have to have strong unit economics and...
Don't get swayed by money and let it mess with the business per se. My last question, so which I think everyone wants to know, when is the grand IPO of both of your companies? You got to take a public shot at making that statement, whether people remember it here or not. So yeah, I'm putting you on the spot.
So 750 million, 80% gross margin, 15% net margin. That's the answer.
Give me a
Whenever
timeline.
that happens,
Come on.
I think I'm
Project a
going to do it
timeline.
much faster than
Take
what
a punt. Ronnie won't trouble you for it. Come on. 5 years?
8 quarters.
Sorry?
8 quarters from now.
That's awesome. Yeah, it's 2 years. That's nothing. Yeah, so we'll give you one more extra.
Yeah.
3 years, sir.
3 years is
27
good,
is the IPO. Yeah.
Depends on what you're going to give me after the rapid fire in case I win it.
I don't have a hamper, sorry, but yeah.
But I would say at least 2 years. After that, we would be ready, and the timing will depend really on...
I'm going to push both of you to do this in 27 because, see, I keep arguing that the public market is a real option only when comparables are set in public markets. So if you guys are the leaders, don't take the option, then you can't have younger companies say, this is how I benchmark to. And I think that's where my compulsion for mid-cap, small-caps comes. Yes. That eventually mid-caps, small-caps get bought and built on the back of phenomenal large caps in the cap table, in the market. Please go public.
That's one of the big points, Karthik, because you don't want wrong benchmark to be set. So therefore, you need to do it.
See, if you see what's happened in the last year or so, 2 years after Zomato, Policy Bazaar, Nykaa, Paytm went public, public markets are on average 10x smarter than private markets, 10x deeper.
Of course, 100%.
And 10x wiser, right?
100%.
So they'll take care of it, right?
Yep.
So if you're doing the right thing, it'll be all set.
We have to do it 10x,
Thank you very much, both of you, for a phenomenal panel. Yeah, thank you. Thanks for being super honest. This is the spirit of a future public company.